Hello and welcome to today's financial report. Let's start with the key signals from Wall Street overnight. The three major indices closed roughly flat, with the Nasdaq finishing at 26,588.49, the S&P 500 at 7,748.50, and the Dow at 53,770.27. Futures were mixed in pre-market trading, with Nasdaq futures down a marginal 0.01%, while S&P futures rose 0.14% and Dow futures gained 0.32%. That points to a steady, slightly warm risk sentiment overall. At the individual stock level, major tech names were moderately stronger. Nvidia edged up 0.16%, Tesla gained 0.17%, and QQQ added 0.15%. SPY was flat, while MSTR slipped 0.18% and IBIT was down a touch. There was no significant selling pressure across the board. But here's what really deserves your attention. Overnight, we saw a cluster of high volatility stocks, and they were heavily concentrated in AI infrastructure and frontier technology names. According to our system verification, Nebius Group, or NBS, surged 34.14% over 2 days. Supermicro, or SMCI, jumped 19.02%. CoreWeave, or CRWV, rose 19.28%. In the quantum computing space, Quantinuum, or QN, gained 27.97%. Sharon AI, or SHAZ, was up 21%, and Astronics, or ATRO, added 17.33%. These moves are mostly attributed to company-level contract wins, technology progress, or order-related news. But the details still need further confirmation. And for the A-share market, these are external event mappings. We are not treating them as a main trading theme today, just as background context for industry trends. Now let's look at the global macro picture. The 10-year Treasury yield came in at 4.657%, down 0.53% from the previous day. A falling yield means the liquidity environment is marginally looser, which supports growth stock valuations. The VIX printed at 14.45, still below the 15 threshold, keeping us in the greed zone. Market sentiment is optimistic and there's no sign of panic. The dollar index fell to 99.84, breaking below the 100 round number. That's a weak dollar condition, which is a positive external factor for emerging market assets and RMB-denominated assets. WTI crude oil traded at $81.12 a barrel, down 2.22% on the day. Lower oil prices help ease inflation expectations, but they also reflect some demand concerns. Spot gold was at $4,449.80, down a marginal 0.14%, holding in a high-level consolidation. Safe haven demand hasn't picked up significantly. Putting it all together, the global market is in a risk-on state right now. The core drivers are falling Treasury yields, a weaker dollar, and a low VIX all moving together. The invalidation conditions are clear. If the 10-year yield breaks back above 4.75% and the VIX rises above 15 at the same time, then the risk on logic needs to be reassessed. Turning to the RMB and the external environment for Chinese assets. The onshore dollar RMB rate was at 6.7313, and the offshore rate was at 6.7428. The RMB is in a relatively strong position. The dollar index breaking below 100 directly relieves depreciation pressure on the RMB, which creates a positive condition for northbound flows into A-shares. On the trade and tech front, there are no newly verified events regarding tariffs or technology restrictions between China and the US. Neither yesterday nor today saw any substantive policy changes. So the external disturbance window is currently quiet. For today's A-share open, our expectation is a flat to slightly higher start. There are two reasons. First, US futures are steady. Second, the RMB is appreciating while Treasury yields are falling, making the external environment supportive. The invalidation conditions are also clear. If the offshore RMB weakens past 6.76 in early trading, or if Nasdaq futures turn down more than 0.3%, then the flat to higher open call is invalidated and we should switch to a lower open with consolidation. Now for the A-share market outlook today. We judge the index direction as range-bound with an upward bias. The Shanghai Composite closed yesterday at 3,926.96. The 3,900 round number is the first support level below, and the area around 3,968 is the near-term resistance above. The Chi-Next closed at 3,586.04, with support in the 3,550 to 3,560 zone. The invalidation condition is if the Shanghai Index breaks below 3,900 on volume, accompanied by obvious net outflows from northbound capital. If that happens, the range-bound with upward bias call turns defensive. On the sector front, the most likely active areas today are the AI data center infrastructure chain, as well as semiconductor materials and equipment. The first maps to the high attention on AI cloud and GPU computing from US stocks overnight. The second benefits from the growth style being favored as treasury yields fall. Both directions have industry fundamental support and have been consistently attracting capital recently. They are not dependent on a single unusual event. One risk to flag is the oil and petrochemical sector. WTI fell 2.22% in a single day, and Brent crude at $86.99 also weakened. Lower oil prices directly pressure upstream energy stocks, so chasing highs there today is not advisable. Also, some stocks that have already run up sharply and achieved their catch-up targets face pullback risks. Avoid high-level lagging names. On northbound capital, combining the weaker dollar, RMB appreciation, and steady overseas sentiment, the probability of net inflows today is relatively high. The signal to watch is the direction of northbound flows in the first 30 minutes after the open. If they actually turn to net outflows and the offshore RMB weakens at the same time, then that call is invalidated. Let me wrap up with today's core judgment. Falling treasury yields, a weaker dollar, and a low VIX mean the risk on window continues. A-shares should be range-bound with an upward bias, and tech hardware is favored. The probability distribution is 35% for gains, 45% for consolidation, and 20% for declines. That's all for today's report. Thank you for watching, and we'll see you next time.